It does suggest that North Carolina is something which is going the way of Donald Trump. In fact, the gap between the two candidates has increased a bit, so we are just watching out for that. At one point of time, the tally was past the level of around 200 for Donald Trump in terms of the leads coming in. So we'll try and update those numbers and get you the latest as far as what's happening in the US election, because for now the US futures have run up quite substantially when it comes to the equity markets. And take a look at the Indian equity markets as well, doing fairly well at the moment. In fact, close to the highest point of the trading session. We'll try pulling up the Nifty and the Sensex for you, because Sensex had hit the mark of 80,000 yet again, and the Nifty too was powering ahead with the kind of up move that we have seen, and that's the latest tally up for you, 211 versus 145 at the moment. Ms. Mahjabeen Zaman, the head of FX research at ANZ, is also joining us on the show. Hi, thanks so much for making time and speaking with us. Well, that's what we were discussing internally, that it's not as neck to neck as we were expecting. Maybe, yes, the early trends are coming in from the states where Republicans have a bit of a stronghold at, but are you surprised by the kind of tally which is coming in, or this is pretty much in line with what you were expecting?
Look, I think it's anybody's guess, to be honest, and I think we need to be patient and wait for the rest of the states to come in and the full count to come out. Of course, ahead of the election for, I guess, the first couple of weeks in October, we did have a little bit of that Trump trade priced in. But interestingly, in the days run up to the election, we saw a little bit of unwinding of that. So two-way risk, this is normal in during election times. Volatility will likely remain until we get something substantial from the final election count.
Let's assume the final election count by the end of the day or early tomorrow morning, and it could be Republican. If it is Republicans, what will change? And if it is Democrats, what will not change?
Great. I think, when we have, again, with the Republicans, I think the outlook will be different if it's a sweep or if it's a divided Congress. Clearly, a Republican sweep, really brings both elements of Trump's policies, which he's been talking about. So you have the tariff risk and you have the fiscal policies that he's been talking about in the way of tax cuts. Now, obviously, if he has a if Republicans have control of both segments of the Congress, passing additional tax cuts might be a little bit more easier than in a divided Congress. What all of that really means for the markets, really, I think tax cuts, especially on the corporate side, tend to be permanent, and that's likely to benefit local businesses and the profit margins as well going forward. And broadly to us, we have seen, in the run-up over the last couple of months, U.S. Economic resilience has continued to outpace other major economies. And clearly, Trump's policies are pretty much pro-growth policies as well.
Can I say that the narrative towards high tariff would also mean that inflation could make a comeback? While the Republican administration is talking about corporate taxes lower, but if tariffs they go higher, then inflation could come back?
I think that's a great question. I think the inflation story, it largely depends. Now, there's two angles which Trump is taking. One is across the board tariffs, whether it's 10% or 20% on all imports. That tends to be inflationary. Back in 2016 or 2017 in his previous term, we saw that he did implement, across the board tariffs on items such as washing machines, solar panels, and the rest. And that did seep into inflation numbers, but I would argue just marginally. On the other side of things, you could argue the targeted tariffs, this time around, likely towards China, which he has come out to say, those don't really impact inflation as much. And the reason is that there's import substitution that takes place. Now, going back to his previous term, he placed tariffs on steel exports out of China. Now, other economies benefited out of that, that shift. So that does not tend to be as inflationary. Now, if we do have a Republican sweep, then the fiscal thrust, if it comes in line with the tariffs, then you might see some offsetting as well. And I think that would help.
Mahjabeen, what's your outlook in terms of how we are likely to see the overall, other asset classes faring? For instance, with the kind of lead that we're witnessing with Donald Trump, you've got Bitcoin prices, which seem to be spiraling as well. Just wanted to understand your outlook as to how, if we do see a Trump win, what it would mean for bonds, cryptos, etc.
Look, I think in terms of a Trump win, again, previous term, it was a little bit of a surprise. This time around, if he does win, it's not as much of a surprise. Markets ahead of this are already, you could see the momentum is shifting positive ahead of possibly that, those tax cuts that might be coming, and, that's supporting the risk rally. But at the same time, I also would like to mention in terms of yields, now US Treasury yields have been moving higher again ahead of this election. And I think that reflects three different things, not just obviously Trump and his policies, but also the risks around, there'll be increasing issuance no matter who wins. They are definitely going to increase the spending much more than the CBO is forecasting. And all of that will at some point hit yields, because if you come up with this increased supply and your marginal buyer out there is not really there anymore, as we have seen, many emerging markets are now shifting into buying gold as well. So finding alternate reserve assets. And so I think that will likely continue to drive towards a higher yields going forward, but we'll have to wait and see.
So if there is a change of government administration in US, what to your mind could be a structural shift in interest rates, in the way how risk assets have moved? Would you like to call out for a big structural change in the medium to long term if Donald Trump is the next president?
Look, I think the big structural change, I think what we have seen most part of this year as well, it has been an election heavy year. And, there have been quite a few surprises, fewer incumbent governments have been re-elected, including, the French ending up with a coalition government, Japan also looking at a coalition, UK shifting as well in terms of from conservatives to Labour. All of this really points to the fact that I think the focus is now becoming a little bit more inward, and that's just as a new era. But again, these changes bring more opportunities. With the US specifically, I just like to say that, again, coming back to the bond side of things, I think the risk is that if the US continues to expand its debt and widen its deficit, over the past years, it has attracted attention from credit rating agencies. And I think that, that element of risk always remains in terms of their sovereign status. Of course, will remain strong, but, I think that's something to think about.
On that note, we let you go. Thanks so much for making time and speaking with us today. So that's the latest coming in as far as the United States elections are concerned, and more importantly, the implication it'll have for the markets, both in terms of the bond market, currency, as well as equities.
If you like this video, then like, share and subscribe to ET Now.